Hello everyone. Welcome back. Today is actually a very exciting video. Now I know I'm posting late, but it's because I've been thinking and debating if I should do this because this is quite early in the mentorship. You guys might think this on a monthly basis, but I'm thinking about this on a 5 to 10 years basis because I have a lot of content to talk about, and with the limited time that I have, I'm trying to do my best by sharing everything that I know and everything that I discover and everything that has been mentioned before by Michael, some stuff that I found from his charters, my own research, and today I guess I felt inspired to do kind of like a review of ICT's latest video. He shared something new that of course was not a surprise to let's say charters, and I think that this video is a good opportunity for me to show you how I go when ICT gives us or gives the public a new concept. As you guys know, I am not the programmer of the central bank price delivery algorithm. I'm just a student of ICT who became obsessed with his teachings and studied everything, made my own research, talked with his charter students, really a one-to-one, and made some discoveries, and is trying to combine everything to make sure I have a very good understanding and can simplify my trading system. Because currently, I have very precise parts of a long story. However, I am lacking the knowledge in connecting those bits and parts of the stories to the larger story. Basically, I know some algorithmic signatures, and I'm saying some, but a lot, more than 40. To give you guys an idea, more than 40, and it's hard to not go into overanalyzing, analysis paralysis, and combining those theories and trying to execute them in the markets. Now, I've already proven myself that I'm a very capable trader. However, I'm trying to invest in my own education by trading less, but by studying more price action. So that's what has been my focus this year. And it's been a very short year, as you guys know, for multiple reasons. But this year, I'm going to go a lot more into tape reading, a lot more into technicals. So since this is my second, in parentheses, comeback video after so many illnesses, I just want to manage your expectations and tell you that this year is going to be a bit more technical. Of course, you know me. I always bring the psychological because it's always present for any trader. Where if you go on a good streak, or you're going into a poor streak and you're doubting yourself, you're doubting your technicals, you're doubting your mindset, you're feeling a bit cold, maybe you weren't on the charts for a while, maybe you're taking a break, or maybe you're just not executing as before, and that might be a big change, especially for a lot of you guys. I know that before you used to execute way more, and now, of course, it's positive, but you're starting to see maybe some effects of under trading, or maybe changing too much your trading frequency too fast. So it might affect your emotions and your confidence, and I would not want that. So I always recommend back testing. Just what if one day you look at your chart, the whole day, you send me a screenshot on how you read that chart. And I think just doing this thing will be a good use to all of you guys, and I'm gonna start to do it. So I will do this for the session that we had Friday, because ICT talked a lot about it on his latest video, and I wanted to go deeper because I think he missed some stuff, and I'm not sure if it's wanted, or I'm not sure if it's because he's just, he's old. As he mentioned, he's getting 53 years old. He misses some stuff, and he doesn't He doesn't teach himself, but I want to show you guys some stuff that, as Super ICT, okay, I can show you that I can be even more precise than him. And that's why I've been debating with myself all day, because I'm trying to teach you guys time advanced theory. He's giving more snips and bits here and there, but it feels like it's a good opportunity for me to show you where exactly can these be applicable, where these can be used. Because, guys, let's not lie to ourselves, the markets are not easy. You can for sure simplify the markets. You can for sure have an easy bread and butter model, and most day traders will recommend you to do that. If you look at Kimmel Trading, if you look at Jade Cap, I'm talking about Kyle. If you look about Ali Khan, they all have a favorite model that if they see that, they trade. If they don't see that, they might not trade for the most part of the time. And that's the area where I think every one of us needs to be. You got your bread and butter, and that can be plural, but you also are capable of waiting and studying and seeing how the market acts whenever it's in a certain narrative, certain situation. Guys, keep one thing in mind. I'm trying to teach you guys all that I know in a situation economically and politically that I've never been before. So it's not that I just want to relativize everything around here, because again, I am not ICT. I'm not claiming what he's claiming. I'm just a very astute, very analyst type of trader, and I've been working on my psychological a lot, not just by trading but by coaching and mentoring, and this is almost a 10-year work now. So it's a very good adventure. It's a privilege to be here, and I want to say big thank you for you guys for sticking here and seeing the potential, investing in me, investing in yourself. I think each and every one of you guys know that my phone, my messages will always be open for you in any situation, any situation where you're doubting something or you're dealing with something. I'm the first one that you can text and say, man, there's something that happened here. I'm struggling to come back, or I'm doing this situation, and I'll be more than happy. My response will be, good, let's make that happen. Let's find a time where it works for both of us. And that, I think, is the most value you can get from this mentorship. Of course, it's relative, because if I show you technicals and if you master, you make a ton of money. That's also good because I'm going to show you today a lot of concepts that honestly they're cutting edge. They're not stuff you have not seen this on YouTube. ICT almost talked about it a few times. He almost talked about it in his latest video that it came yesterday. It was algorithmic timing and journaling. So I thought, I was like, I'm gonna watch what he says, see if I can learn something. Maybe he exposes a new thing, and he did, but it was very small. But I'm still gonna share with you guys, and I think I'll go a bit deeper in what I know and how I go whenever he posts a video and I'm not sure about it. And it's so important because he's gonna put out a lot of content, and I'm gonna learn some stuff that maybe another charter has said or discovered, and people are gonna learn from me, and vice versa, right? But this is the reason why you need to do your own study. You need to do your own reviews every day or every week, and try to look at the market and find what do you think about the market, right? What do you think technically? What do you think based on the narrative? Was there any major important news? How did the market react to a fake important news? How did the market react to any economical events? What was my expectation during that time? Why was that? Why was it incorrect? And all of that is a process. It takes time. And I'm going to share with you my thought process on how I look at his videos whenever he gives a new concept, and how do I digest the whole thing knowing what I know. First of all, let's look at this beautiful economical calendar event. So Monday we have PMI news. I think Monday will be a good day to trade. If I would be trading it would be Monday. It's a good day. I think we're gonna move. If you look at the current market, and I'm gonna go there very, very soon, but you're gonna see that we created a new week opening gap, and it's a very big one. And we're gonna be able to see what do I expect from this gap, combining what ICT said on this video, but even go further than that, because that's what he likes to do, right? He likes to tell you, oh, this is a market maker model, and this is the first presented for value gap, and that's it. And then he boasts about it for like an hour, and he's happy, and I get his excitement. I'm passionate about this too, and he's the owner, he's the man. Of course, but and maybe he does that because his audience is so broad, but my audience here is not broad. I'm with 5 traders that each and every one of you wants to develop their technical skills. You are supposed at least to have watched most of ICT's content and my content. It should have given you a very strong foundation on every concept, so every bullet market maker model and time elements. And that should be, you should be a way further than like 60-70% of traders, at least technically. Now I know we have a new joiner, but it's going to take some time. I've shared with this person the market maker advanced model so she can at least see the market, because this is what we're going to talk about today, because the market maker model is always running, and it was so clear and beautiful Friday that I even told one of you guys, I was on a call with one of you guys, and I told you, look at this textbook day, and you don't even need the most technical elements, the most the most complicated things. You just need to have one thing: confidence and technical knowledge. And I'm gonna show you why is this confidence and technical knowledge, and I'm gonna tell you my whole narrative. Right before that, let's look at this composite CMI Tuesday. So I suspect Tuesday to be a rebalancing day, and we're gonna go look at that on the daily 4-hour 1-hour chart. Wednesday, I suspect this to be an expansion day, and Thursday a continuation day, and Friday probably a TGIF type thing. So that will be my current expectation. So keep this in mind. If during the week, something that I would strongly recommend, if during the week you're trading and you're unsure about your own success, your own executions, what should you do, his given scenarios, well, always come back to this video and look at how, what was my thinking, what was my words, because I do believe that I talk very densely, because I'm trying to save you some time, but at the same time I'm trying to give a lot of information, so that might be a lot for you to digest. And I think it's normal. It's not because you're not smart, it's not because you're intelligent, it's just because I'm telling a lot of things in a short period of time. So it's normal that you come back in the week to this video, and I would recommend to do that. Actually, like if you're on Sunday or Monday, you're listening to this video, well, I would recommend to come and watch it on Wednesday. Wednesday is always a key moment, and don't hesitate to ask me, now that we're Wednesday, now that we've seen this price action, what do you think is likely to happen for the next few days? Because that, and some of you guys have done that. I'm not telling you none of you guys have done it, but I think it would be a great value if you ask in the chat for everybody, because that's what we should do. We're a traders group. We're trying to read the market. We're trying to gather knowledge and make sure we have good bread and butter models, and also upward your research and development. Because if we don't have the full picture of anything, it's going to be hard to practically use it. And even though you can say, yeah, I'm going to use bread and butter models and everything, it's not as easy when you don't have the full pictures. You're always going to have that technical uncertainty about, okay, I've had this thought about this price action, and it's not going to be sure. And yes, it's going to allow you to train your confidence, to train your faith in yourself as a day trader. But more knowledge is more power, and that no one can tell you it's better to have less knowledge. No, I'm of the philosophy that the more you know, the better it is. Now, you might be willing to live in ignorance and be, like you say, joyful and ignorant, but I don't think that's a proper and sane way to look at life. That is just my opinion. So, based on everything I've just said, let's go into the markets, okay? So, these are concepts that are very, very simple here on the left if we start, because we're going to talk about the right after. But let's decorticate this a little bit. So we're starting on Monday. Now let's go into a perhaps a 1 hour time frame. Okay, just so that you see what would be my thought process. Now these were my recent executions, nothing fruitful, just very, very little profit here and very, very little loss here with 5 micros. So this is micro and Q. Anyways, this does not matter. If we zoom out here, we are in a decrease in price, if you guys remember, correct? We're coming from this daily fair value gap, and we're coming here doing a run to sell side liquidity that was grabbed in this area. Now it's totally normal and to be expected that we go a bit lower. However, if we look into the 4-hour chart, we also noted in the previous weeks that we had an SMT. Now I deleted it for the sake of this video, but you guys know, if you watched the previous video, of the SMT with this low and all the other indices, and that's why we expected at least some form of bullishness. That was my narrative of last week. As you can see, that's what we're somewhat getting. We're having some consolidation, some rebound around this area after we had the take of sell side liquidity, this line, and take of the SMT. So some indices took the liquidity and NQ did not, and I told you why usually we would favor NQ, and now I did not, because of the whole economical condition and because the 2 other indices took that liquidity level. Now let's go into this time frame just a little bit smaller. Considering that we expect bullishness, considering that we come from a daily fair value gap, considering that this looks like a beautiful accumulation, manipulation, distribution, what do we expect to form at a low in which we think it's gonna bounce? So I'm gonna repeat this because this is actually very important, and this is how we implement market maker models. When you expect a bounce or a reversal, but I prefer the word bounce because market maker models are not usually a reversal. There can be continuation of a much higher time frame. So anyways, this is for another video, but I hope I was clear. And as I mentioned, this video you might want to look multiple times because we're gonna go technicals. I'm telling you in advance, technicals. Okay, we're coming from a market maker model. So what can we expect? A market maker buy model to happen here. Very, very good. Perfect. Did we have that in the previous days? No, we did not. We had some form of accumulation. Perfect. But Brandon, that's the first part of a market maker buy model. Absolutely, we have some sort of accumulation, manipulation, and distribution. Now that can happen in, for sure, your larger time frame, but it can also start the expansion of the higher time frame if it happens on a smaller time frame. And this is what we're gonna be looking right now on Friday's price action. If we look at this beautiful price action, what do you see? Just, you can pause the video. But I think you guys have been trained, and if you're not trained on this, well, it's probably an indication to go look back at the market maker model video. But if you're expecting a market maker model, we suspect this type of formation here. So accumulation here, a drop lower. So if we're on a higher time frame, this would be the accumulation, right? This would be the manipulation, this whole range, and this entire range would be the expansion, right? You guys are seeing it. So from 9:30ish to right now, it would be the expansion of this accumulation from the other days, 4 p.m. Asia session, pre-market session, and then we come here at the 8:30 news embargo, and we have the manipulation. Why do we expect manipulation before 9:30? Because 9:30 is the expansion sequence. And if you guys remember advanced time theory, I have already mentioned this, and that's why it's important. I'm gonna come back on this. Don't worry, we're gonna go into a 1-minute time frame and go a bit deeper, and actually go very deeper. So this is one of these videos that, again, I'm telling you, it's important. You can see the market maker model, accumulation, and even here happening on a smaller time frame. Accumulation manipulation, distribution. Okay, that should be something that your eye should be used to see. Now let's go into a 1 minute time frame, because this is where I wanted to spend most of the video of the time here, and it's gonna be very important. First of all, you see the reaction here at midnight. This is midnight of the day, as you can see, Friday 21st midnight, and we have this beautiful power of 3 happening at what time? Of course you know it, 3 a.m. If you didn't know this, you probably missed out on my Asia session or London session trading video, but this is classic reaccumulation model. That's the bread and butter model that each and every one of you should be able to trade. And one of you guys is specializing in this session, and you're supposed to put your sell limit or your buy limit 10 points above the midnight range, and the midnight range is at 75. 10 points would be 85. As you can see, beautiful entry. And if you look at the formation price, beautiful for value gap here at 302, and then runaway at 304 for the run to sell side liquidity. Now this in itself, as you can see, is already a model. This is already mentioned, power of 3 model, and most of the good entries, you guys already know this, are happening in London session for the power of 3, because London is a manipulation swing. You guys should know this. Coming back on some lessons that I've taught last year, because again, it might be old, it might be, you guys might have been through a lot of things. If London has a London protraction swing that is bullish, and London is not supposed to be the entire movement of the day, then this should be considered as manipulation on this specific time session. Very important, very important. We have the manipulation here, beautiful entry, a move upwards here around 4 a.m, almost touching midnight. Now this is not what I would expect, I'm being frank here. It's 4 a.m, I'm not suspecting another run here, so it's not going there. Honestly, I'm fine. But again, I'm giving you my real expectations. I did not expect this, okay, because it's 4 a.m. Now maybe there was some event, maybe there was some action, but my analysis for now is on the 1 minute chart and based on the daily time frame model and narrative that it seems to be playing. Okay, so I'm gonna let you think that, and I'm gonna grab a little bit of water. Okay, let's go into the right part. We've seen here a beautiful 2022 model. Now you're like, why, Brandon, is this a 22 model? Well, my friend, what is the kill zone of New York? You should know this. The pre-market kill zone is 7 a.m. Let me show you this. 7 a.m. You should know 7 a.m. by the way. To 8:30. I'll just show you this here. So in this range, you can actually see this as a structure that will give you a model. Now a model, I'm not telling you the whole model is gonna display on it, but you are likely to get, to be more precise, your entry. If you're dividing time of this specific range like this, what are the levels of sell side liquidity and buy side liquidity that are interesting? If you're looking at this range, this will be the sell side, and if you're looking at this range, this should be the buy side. As you can see, and actually let me be even more clear, as you can see, we have the dealing range internal of this section being created here. Now ICT in his most recent video presented this concept in talking about this session. I extremely strongly recommend to watch his video, because he is talking about the same concept but here, and we're gonna go here. I'm just gonna supplement what he mentioned, okay? But I'm showing you this same, how to use what he said of New York session and PM session in London session. Okay, so this is actually extremely important, because he is showing you one part of it. He's showing you New York and PM. Fine. But how do we use this throughout the day? Right? That's the most important. That's like, okay, but I need to have the full picture. Like, you can just, who would decide one day and just trade on this vision of price? Yeah, for sure you can do it. I'm not telling you it's bad. It's actually, statistically, it's an edge. But the truth is, it's an edge depending on their narrative. And that's the thing that it takes. Man, if I would do the whole daily analysis of everything, it would take me 3 hours to analyze the charts, to see the narrative that are internally shown on the markets. And it would increase my probability of trading by maybe, what, 5%? 10%? Now, you might say, well, Brandon, that seems like good odds for trading. You know, you want to have all the odds for you. Well, it might be good, but it's not sustainable for me. I do not want trading to be my whole life. I do not want trading to be my thing that I spend all my hours during the day studying the charts and being here, and just that for give me a trade that, you know, do 70 times more effort to get what, 1 times more output, to boost my ego and to feel like I've got extreme precision. Like, I know it might sound crazy because I'm teaching you this right now and I'm showing you concepts that you can use, and like it seems that it maybe some of you guys, this video is like, oh shit, now I know how to use this concept, like now it actually makes more sense. Well, yes, but remember, what did I use to adapt this vision? I had narrative on higher time frame. I had clear narrative on higher time frame. I did not decide to go on any random day and use these glasses to see the market. That's what I'm trying to tell you. That the same thing that he shows you, okay, a new concept on this session of the window of the day, he does not show you this part. Okay? And the time of this video is currently at 27 minutes 22. I might cut some elements of it because I'm drinking water, I'm taking some pauses, but this will be the public part of the video. Okay, and the rest part of this section of 9:30 to the rest and the deeper version of his version is gonna go for charters only. Why? Because I want ICT to be a little bit pissed of this by this video. I want everybody to think, damn, he's not gonna spill the beans on everything. But I believe this is extremely important. And if you want me to add even more things, right? If we're expecting this run here, again, to be a market maker buy model run, so this is the sell side part that is going to be mitigated once we come here, right? You should expect that market maker buy model gives an opportunity to buy, to run, right? Well, we can for sure have this range from the kill zone to 930. This 936, so 925 low. And you're gonna find some very interesting things when you grade this at the 25 level, the 0.5 level, 0.75. You guys know, what are we expecting at 0.25, 0.20, 0.30? The breakaway gap. Oh, no way we're getting it here. No way. This is also another breakaway gap with a very, very tight entry here. Oh, you see? No way we're getting the accumulation at 50%, right? Like, you know, no way this 75 is consequent encroachment of the first 930 percentage for value gap. Like, there's so many things, guys, that I wish I could. I mean, I'm not wishing that I could show you. I'm telling you guys. But most of it will be for charters. So this is the end for the free version, and for charters, you're gonna just see this as one video, and I'll see you very shortly.